Planeta con Larry Navarrete.
Welcome back to Bottom Line with Larry Navarrete, episode number 22.
Deuce.
Pew pew!
Hello, everybody. This is Larry Navarrete with Lone Sweet Mortgage, NMLS 670362.
Larry, how we doing?
Good.
Enjoying the weather now, huh?
You know what? A little rain don't hurt nobody.
It's nice. It's windy. It's cold. It's different.
Well, we went from hot to cold kind of quick, huh?
Yeah, and then we got a little bit of rain again.
We had a little Friendsgiving last weekend, and
You do that thing?
we had a little like, oh damn, let's get out of here. 'Cause nobody brought a jacket, nothing. Like, oh snap.
You got a Friendsgiving? Wow.
It was actually a Friendsgiving, but it was pollo al disco.
Oh,
So
okay.
it wasn't. It was a Mexican, Friendsgiving. No, turkey or ham or anything like that.
I do Festivus,
What is that?
a holiday for the rest of us.
Where everybody brings everything but you, or
Yeah, exactly. We gather around a pole and we share our grievances.
Oh,
Yeah, how we don't like each other. But yeah, it gets pretty cool.
what? I like everybody.
At the end, people end up wrestling. It's pretty cool.
I say no to violence.
So Larry, speaking of saying no to violence, we got new stuff on the frontiers. I've been seeing a lot on social media about these new awesome loans that are not still here yet, but are making a big roar.
A splash, a roar, up in the air. Nobody knows, right? Nobody knows, and people have asked me, and people ask each other. I've heard nothing but negative stuff.
Okay.
I've heard nothing but.
Well, the way it looked at me, the way they exposed it out there, I was
I
like,
mean, when you look at the raw numbers, it is very.
dramatic.
Yeah, it looks like the banks are out there just gaffling you.
Oh yeah.
I look at it like I don't think it's going to pass, or I don't think it will ever come up, because I don't think the banks want to do it, because it's a very dangerous to the bank.
It's a 50-year loan, huh?
It's a 50-year loan. That's what 50-year loans, and to me it's very dangerous to the bank.
So you buy it at the age of 20. You buy a house. Let's say you did. You would pay it off when you're 70.
Or you buy it at 40, you end up at 90, and that's what people are saying.
saying.
I was at the radio a couple of days ago, and they were like,
Yeah, you're a radio star now, huh?
"Oh."
Moving
I
on
didn't
up.
even know we were live. But anyways, the guy asked me, like, well, what if I'm 40 by the time I'm 90? And that's what the mentality of most people
Yeah.
say. Like, 30-year loan, I'm not even going to pay it off. And I've heard, or I've seen, where people, once they reach 45, 50, they hold themselves from buying a home. Because they always say, like, well, 50, what am I doing buying a home at 50? That's 80.
That's 80 years old on a 30-year loan.
Yeah, 30-year.
Now it's 90.
And now I tell people, on a 50-year, on a 40, it's 90. And I tell people, you never look at it that way. So I think I've told you, and I told a couple other people. So let's just, right now on a $300,000 home, your mortgage is $2,000, $2,050, right around there, $2,100. And on a 50-year loan, it would be about $250 cheaper. So $2,000, $1,850, $1,750, right? And I told you, like I told somebody else, and then it's like, oh, that's basically renting. And I go, well, if you look at it that way, maybe it is.
Yeah.
But let's just say, I tell you right now, the average rent right now on my particular properties, it's about $1,700.
Okay.
So if I were to tell somebody, you know what, I'm going to rent you for $1,700, and I'm going to guarantee you that rent for the next 50 years.
They'd be okay with it, huh? Probably.
I'd probably be okay
Yeah,
with it.
yeah.
Because I'll take it, because that means I'm never going to for my lifetime, my rent is never going to go up. They'll probably take it.
You're guaranteed.
You're guaranteed. So the same thing with your
No inflation.
with your mortgage payment, no inflation, right? It's a 50-year loan. You know you're getting it right now. And we go back, right? I always go back, and I made this comments a couple times. My parents bought their home. They had a triplex before, but they bought their single family home in 1983 or 1984. Their payment was $657.
Back then.
In Salinas, California, back then. It was pretty expensive. And
Yeah.
you hear people, oh, you sold yourself for the next 30 years, for the rest of your life, and blah, blah, blah. And I'm like, and when you look at it like that, yes, right? But when you look at it now, $657.
It's nothing, huh?
It's nothing.
Nothing.
Why? Because in 1990 or 89, 90, when I started working, minimum wage was $375. And 3 weeks later, I remember it went up to $425.
Balling.
I was balling, right? $60 a week, right? $70 a week paychecks, 20 hours in high school, right? And I'm like, the value, it was a lot,
Yeah.
right?
It was a big change from 375 to 425.
Yeah,
right?
no, but the payment was $657 was a lot.
Oh, okay, back
right?
then.
Back then it was a lot. Now my daughter's making $15 as a high school student.
Yeah.
So imagine if you have that loan, right? And here in Yuma 20 years ago, right? And 30 years ago. I got here 20 years ago, but I heard stories about Yuma. 30 years ago, well, we're talking 1990?
Yeah.
Yeah, 1995. What was the home price of that? Between 80 and 100,000?
75, 85.
75, 80?
Yeah.
Right? $450, $500 mortgage?
Yeah, for a 3-bedroom.
Right? So if you were to tell that person, 30 years ago, 25, 30 years ago, hey, your payment's going to be, $500 for the rest of your life.
Yeah. They'd
Right?
be okay right now.
They'd be okay.
Because they got raises and all
They
that
got
other
raises
stuff.
and everything. So now imagine how bad it's for the bank. Because that value is, that payment that you're paying now, that $500, is nothing to the bank. How many people do they have to collect from to lend somebody else money?
Yeah.
Because the money, so everybody looks at the small picture, or like, oh, the bank is making all this money
All
in
this
interest.
money, yeah.
In interest, right? But on the long run, 10, 15, 20 years from now,
You're going to be saving money because you're
gonna be saving
guaranteed rent.
a lot of money. You're guaranteed. I look at it, my wife tells me she had a couple uncles, right? And we all have family. My wife comes from a family of 12, from my mother-in-law's side, one of 12. They all have homes except 2.
Okay.
One, yeah. So who do you think is struggling now? The one that never bought a home back in the 80s?
Because they're paying rent.
Because they're paying rent.
And it's expensive.
Over $3,000 a month
Yeah, when they could have locked it in, like you said back then.
back then.
But now you can lock it in for 50 years
Now
at
you can lock
guaranteed
in
rent.
A guaranteed rent or guaranteed payment. And it could get only better because the rates drop. When your income increases,
You can refinance.
You can refinance this. Or you don't even have to refinance. You could just pay more. So let's say right now you could only afford a $1,750 payment, right? And that payment would be $2,000 if you go to a 30-year loan. And right now you're making $20 an hour. Well, what if in 5, 6 years you're making 25? Now you can make the $2,000 payment.
It's a big difference.
Now you don't have a 50-year loan no more. You could pay it off in 33, 34, 35
Because
years.
you're paying into
Because
it.
you're paying into it.
Paying into the principal, right?
Yes, you're paying into the principal. So the 50-year loan is out there, but you don't have to pay it in 50 years.
You don't have to.
You don't have to. I mean, if you could. I mean, even like I said, even let's say people that in 2020, right, or 2018, whatever, they bought a home cheaper and they got a real low rate, right, and they got a 30-year loan. Well, those mortgages right now are $800, $1,200. If they really were disciplined and the rent right now is $1,700, they could technically pay $200, $300 extra
Yeah.
every month, and instead of having a 30-year loan, they'll pay it off in 15, 16 years.
Get it done with.
Get it done with. So it's there, but nobody tells you like, oh, you can't pay extra.
No, you can, but people usually spend it on something
yeah,
else.
people usually spend it on something else. That's why I always look at it. Is the glass half empty or half full?
Yeah. It's whatever you prioritize.
Whatever your practice. So,
But it's a different way to look at it.
I think it's a different way to look at it. So if somebody tells me, you know what, Larry, you're guaranteed this rent
For
the
50
next
years.
50 years, I would take it in a heartbeat.
And plus, it's going to be your house.
And it's going to be your house. And then people say, like the 50-year, at the radio station goes, well, if I'm 40 and I'm 50, that's 90. And I go, see how you're setting up your kids so much, so good? Because we always talk about, especially in the Hispanic and in community, like, I'm doing this for my kids, right? This is for my kids' future, right? Well, imagine if you're buying a home right now. Like I said, my aunts and my uncles that live in California, right? I don't know, maybe they have already, maybe they haven't, I don't know, right? We don't get into that much business. But let's say, I know their payments are like right around $1,200 or $900, if they still have a payment.
Yeah. Maybe they paid it off already.
And maybe they paid it off, but even if they still have a payment, right, of $1,200, how cheap is that for their kids?
It's a good deal.
If one of their kids is going to have it, or
Yeah.
they split, how cheap is that?
Yeah, you just,
Maybe the dad didn't pay it off, but now the kid's going to pay it off.
you can roll it over.
You roll it over to the kid, and how much cheaper it is. Because right now, either one of my two aunts that I'm talking about, their mortgage, their house, if they rent it out, would probably rent anywhere between $2,500,
Wow.
$3,000.
Double.
And if their mortgage payment is only $1,000, $1,200, that's half. Less than half.
Well, that's an option. Like I said, 10 years in the future, maybe you could buy another house, a shorter
Yeah.
term, and maybe rent that
Oh,
one
you
out.
could pay a little bit extra.
Yeah.
All right.
And cut the.
So I mean, everybody looks at it to the bank. Oh, the bank is going to make out a bandit. It's risky for. I don't think it's going to pass, or I don't think it'll come up.
You don't think it'll happen?
It's too much risk for the bank. Just because of the valuation of money, too much risk. You're lending somebody money, and they're going to pay you back in 50 years, or a little bit.
It's a long time.
It's a long time. And then the value of money.
It'll go, yeah.
What happens? I've had, you right now, you can't afford it. I had this customer, I remember 18, 20 years ago, when I first came to Yuma, I started working at Bank of America over in El Centro, in Perro Valley, in Calexico. She had bought a house in Mexicali, all right? And she owed what is equivalent to $60,000.
Oh.
The dollars.
Yeah.
And it was a home in pesos, but she owed what is equivalent to that time at $60,000. Now, I remember the peso was like $12 pesos to the dollar. Well, when that changed to 20, she asked me, what should I do, Larry? I'm like, well, shoot. Because now she didn't need $60,000. She only needed like 34, 35.
To pay it off.
To pay it off. Because of how the money...
Exchange.
The exchange.
Yeah.
Right? So people look at the exchange rate, but it's a devaluation of money.
Yeah. Same thing.
Same thing.
With time.
Or time, right? A kid making $15 an hour right now, like I look at my daughter, she works 20 hours, it's $300.
Yeah.
I work 20 hours, my check was $73, $68, $72. If I ever got a check of $100 in high school, I was like, balling. Because, I mean, you got to understand, at 425 minus taxes, just, call it, very little they took away from me, right? But at 30 hours is $120.
That's good money.
And back then it was really good money, $120 after taxes and everything, maybe 110 went away. And gas, when I started working, it was 89 cents a gallon.
Yeah.
So I remember when my mom and dad, here, put $5 of gas. It was 5 gallons, $10. It was.
It'll go.
It'll go.
Take you all week.
Right. Now I was like, you got to put at least 20 before you see the needle move.
For it to go up.
For it to go up.
Gas mileage is better, but like you said, they're still. I mean.
Right. So that's what I'm saying. The devaluation of money.
So, who's going to decide whether this goes through or not?
I don't know. I think it's up in the air. Like I said, I just wanted to bring it out there. Don't think it as negative. It's actually very positive.
Yeah. So don't just go for the numbers.
Don't just look at how. Well, because if you look at the raw numbers right now, when you look at a 50-year loan, right, and you have a $1,700 payment, all right, you're only going to probably see $50 going towards principal.
Because it's 50 years.
And and the $1,650 will be interest. Yeah. On 17, but remember, every month it cuts a little bit and it starts flipping. And remember, what you are doing is you're buying insurance on your own.
Yeah.
Because if you get to 60, 70, and 80 years old,
you still got that low
payment, right? And you don't have to struggle. Just imagine if you don't buy a home and rent keeps on going up, what's going to happen? Your Social Security you're not going to be able to make it. I look at my in-laws, right? I look at my in-laws, and they're living large because they bought in the mid 80s and they paid off their property.
Yeah.
So now they just live off their Social Security with no mortgage payment.
That's not a lot of money, but at least they don't have to worry about that.
Because they bought. So they never thought they were going to pay off their home because they never thought they were going to get to be 70 years old.
70 years old. Yeah, you never think of the long run.
Right? They never think of the long run. But it's going to happen.
Time flies.
Time flies. It's the same thing when we talk about life insurance. Oh, I'm not going to buy life insurance. You're going to die.
You're going to die. Somebody is going to need that money.
Somebody's going to need that life insurance money.
Yeah.
Right? Not you. Your spouse, your kids, or whatever.
I mean, it's just like.
So that's the thing. You're buying an insurance. You're buying insurance so the day you retire, you're close to retirement or whatever, you'll be able to live.
Yep.
Without, you can't pay rent.
Pay rent. So
because right now your Social Security is not going to be enough to pay rent.
So lock it in. That's what you're saying. If it happens.
It's an insurance.
Yeah.
It can't get any worse.
It gives you peace of mind.
You can't get any worse. You could always refinance to get better. But it's not going to get worse.
Worse. Because you're on top of it.
That's it. It can't
You're
get
locked
worse.
in for 50 years.
You're locked in for 50 years.
Lock it in, guys.
It's not going to get worse.
Lock it in with Larry if this 50-year term does happen, which Larry says it's not going to happen. But
I don't think it's going to happen.
Yeah, it's a lot of money to give out and wait for it to come back in 50 years. Larry, where can they contact you? Where can they see you?
Larry Navarrete, Loan Suite Mortgage. 928-785-2451, 928-785-2451, and MLS 670362.
New location, new office, 449.
Where we went that? 449
West 20th Place.
Does it come up on Google now or no?
Yeah, it comes up. 449 West 20th Place, Suite C.
We don't even have a name up. We don't even have a suite number. But we're there.
You're a hidden gem. All right, guys, come see Larry.
All right.
La neta con Larry Navarrete.